Okay, and this and so this is sort of the world. No, honestly, I'm not making this up. Okay, and one doesn't really know what's legit and what's not. Okay, well, what inevitably happens though is that you sort of stick to some things that make some sense. All right, and inevitably, you know, you kind of gravitate to some of those things. So for me, it was sort of a move towards price action. Does the sound decent? Allison's telling me she can't hear me. Okay. I see the little thing moving, so it should be okay. All right. Okay, so this is sort of the track that people take, all right, is, you know, this phase one here, we are ranked losers. All right, I hate to use that word, but it is what it is. You buy in the wrong place, you sell in the wrong place, and you know nothing. All right, it's not your fault. It's just the fact that we're not particularly good yet. All right, and the big sort of thing with this loser phase is that you're trying lots of stuff. All right, so I'm just going to put you lots of systems. Okay, you're just trying lots of different things. So you're trying a little bit of this and a little bit of that, and you're going kind of back and forth on whatever you're trying, and really none of it's working for you because you have no idea how to implement any of it. You're not a specialist on any level, and you just are trading. You just donate pips ad infinitum to the market, all right? And this phase lasts, what do you think? Depending on your level of motivation and a level of initial knowledge, how long do you think this just blatant loser phase goes on for? 3 months? Probably 3 months. Okay, John T says 3 years. Okay. All right. Then you start to get on the clue train that, hey, maybe I need to educate myself a little bit. Yeah, it depends. There's lots of variables, isn't it? How much time you can devote to it. Your aptitude level, frankly, because everybody's different in many respects. All right. But the bottom line is that you're trying lots of stuff. Okay. The next phase one enters into here is you pick up on a couple of things. So let's say that you like oscillators. Let's say you like CCI and, I don't know, Elliott wave, for instance. All right, and you come up with this system using CCI and Elliott wave. All right, and then the phase two you go into here is I'm going to trade a lot. I mean, a whole bunch, lots and lots of trading, and you're going to make lots of pips, but you're also going to give back probably a little bit more. So you're probably going to make 100 pips a day, and you're going to give the market 120. All right? However, you have now adopted one trading system. And guys, if I miss your questions and remarks initially here, I apologize. I will get back to them, so please don't think I'm ignoring you to ignore you, okay? All right, so the second phase, you're just trading a whole bunch. But you are using this one trading system. All right, and this phase also lasts about 3 months, depending on the individual. Okay, so phase one's about 3 months. Phase two is about 3 months, and you're about 6 months into your Forex trading career at this point. Right. And Solomon, that's half the problem. Okay, this is half the problem why I think people stumble and fall a little bit. All right? Right. Then you go into this third phase. All right? And this can be a frustrating and exacerbating phase in Forex, trading in general. Alright? And this is the break-even spin your wheels phase. Okay? And thank you, David. Alright, and this is where you're trading less, you're making pips, but you're also giving back as many as you make. You're not losing at this point, but say you make 40 a day and you're giving back 40, and on a different day you'll make 50 and give back 30, and on a different day you'll make 30 and give back 50. The net result is that your equity curve does this. Your $2,500 account goes from anywhere between $2,700 and $2,362 for months. Okay. Now, this phase lasts generally 6 months. Okay? Who can attest to any of this so far? Alright, now, here's the thing. Okay? Here's the thing. Is that most people at this point don't realize that analytically they're actually not going to get any stronger than this. Okay, you got to know some things to get to a break-even phase. You cannot be, you got to know some stuff. Alright? Now, the tricky thing at this point is that this is what happens. Okay? Is that the thing that's required to propel you to stage 4, okay, stage 4 is making 15 to 20 pips a day. Okay, it's a grind, but you're now profitable. On average, at the end of the week, you're going to be up 60 to 100 pips. I use 50 to 1 leverage, but in terms of lot size, I'll never risk more than 1% on any given trade. And typically it's more like 0.5%. So I'm very, very, very deleveraged. Okay? Right. So stage 4 is a sort of 15 to 20 pips a day. Alright? And the thing though that takes you from this break-even phase to this 15 to 20 pips a day phase is what? Right, it's any number of things, but it's not analysis. Okay, this is the important thing. Okay? To get you from here to here, it's money management. It's getting better at money management. It's experience. It's consistency. It's psychology, meaning that your patience and discipline gets better. You know your strengths and weaknesses. You stop trading the rubbish. In other words, you can identify a poor market and trade less. The novice trades more in bad markets. That's a big deal. Okay? However, it is not a new system. System, is the trading system the problem? Not so much. Okay? You don't change analysis. So inevitably what happens here in this break-even phase, and it goes on for months and months and months and months, what happens here is that this person goes, you know what? I'm not happy with the way I'm trading. And guess where they go? They dip into the Holy Grail bucket again. And they go, there has to be a better way to skin this cat. Right? And they go, you know what? This CCI Elliott wave thing I had going on is rubbish. Let me go and see what else is out there. And then this other razzle-dazzle thing, this new slope indicator they see, man, this thing looks like money. Right? And then guess what happens? Is that this whole phase starts again. And I'll get to phase 3. And we'll start to spin our wheels again. And it'll get a little bit silly. And you realize that you're basically liquidity in the market. And guess what happens? Toodle on all the way back to the beginning again. And inevitably what happens is that psychologically, your brain never generates a positive association with anything in the market. So your poor brain never knows what's working and what doesn't. And you've never done strategic testing to find out what's been successful with you over a track record or a period of time. So whenever you get into something, you're so freaked out by any adverse price action that you just jump out of it because you have no idea what's worked for you in the past and what hasn't. So you'll get into something, oh no, it's working against me, you'll get out of it. Then it starts to work for you and then you'll chase it. And then that works against you, so you'll get out of it for a loss. And so on, and so the cycle continues. Okay? All because you went and changed the strategy midway. Alright?